Welcome back, you legends. I'm Dr. Cal, and this is going to be a very quick update because I gotta catch some sleep. So let's jump right into it. The stock market map. Look at this. Tech leading today. We have Google, Meta, Amazon, semiconductors like Nvidia and AMD, and we have Microsoft and Apple all leading the market today, with the NASDAQ up 1%, S&P up 0.58%, and the Dow basically flat, with the Russell almost flat on the day. Let's take a quick look at the different sectors. Again, we had a counter trend bounce in tech and communication services. If you take a look at the weekly performance, these were some of the hardest hit parts of the market, with cyclicals and tech really suffering last week. So this is a rebound. That counter trend bounce that we were looking for has potentially already begun. This is the daily chart for the S&P 500. Something major worthy of note is this: we closed above the 5-day moving average for the first time in more than a week. If we take a closer look at the 1-hour chart, again, notice this, guys. This is the 50-period moving average, this green moving average. Notice we did not close above it any time at the end of the day until today. This was an intraday close, and then we immediately reversed and went and closed near the lows of the day. Today was the first time where we closed above this green moving average. If I take a look at the 1-hour chart, this is our proprietary 1-hour chart, the Money Time Machine proprietary 1-hour chart. And a lot of things to note here: bullish divergence on the stochastic and a bullish divergence on the PPO. Both of them played out today. Look at this gorgeous break above our wedge resistance. This time we held, flagged, and then closed above the 5-day moving average, this gray moving average, for the first time on the day. This was the first daily close above the 5-day moving average in a while. So this is critical, and all of this came from our level of support, this buy zone here, this bottom of the black box, the range, and we're now in the middle. So what tends to happen, guys, when the market wants to rally in a counter trend bounce, when the trend is still to the downside, we usually first recover the 5-day. Usually after that, what happens is that we gap up and we continue higher and we close near the highs. That's usually what happens. In fact, let me show you several examples of this happening, because that's often how it plays out. Here's an example. Here it is. Opens at the lows, closes above the 5-day moving average, a bullish engulfing candle. The second day, we gap up above the 9-day moving average, this orange line here, and we close near the 20-day moving average, this dark red line. A lot of these counter trend rallies play pretty much the same way. Here's another one: bullish engulfing candle, close above the 5-day, then continued rallies after that, and a close near the 20-day, in this example, above the 20-day moving average. Here's another one, guys: counter trend rally from January of last year. First close above the 5-day, then a big rally the second day, and all the way into the 20-day moving average. That's kind of what I'm expecting right now, guys, is a counter trend move to the 20-day moving average. That means 451 plus on the S&P. More likely, if I take a look at the 1-hour chart, we're looking at a rally. Let's see, 452 plus, even potentially to 453 in the coming days, and then a rejection and continuation to the downside to either form an equal low or a lower low. If we form a lower low, that means we continue to sell off for several weeks. If we form an equal low, it could potentially mean that we see more buying until we get another reversal later in August. As you all remember, guys, the seasonality of pre-election years, we tend to get a lot of chop, especially in the NASDAQ. But if we take a closer look in August, we tend to see this bounce towards the middle of August. That's exactly where we are now. We're getting this beginning of a bounce. Then we should see another sell-off into late August. Then from late August, we should see another rally. That's based on seasonality. Let's take a look at the NASDAQ. Gorgeous bullish engulfing candle at the edge of our descending or falling wedge pattern. This is a bullish bottoming structure. This falling wedge is a bullish bottoming structure. We had the first break today. This is a confirmed break. We broke above resistance and closed above the 5-day moving average. First green check mark here. And again, I still expect more buying, a lot of green days. at least 1 or 2 more green days until we hit the upper edge of this chop box and the 20-day moving average. If I take a closer look, here, guys, and take a look at the 1 hour chart. Again, we have this chop box here, and we're likely now beginning to see that counter trend bounce that could likely stop either here at 377.8 or slightly higher at 379. I think we'll see rejection either at 377 or 379. There's a possible outsized target of 383, but there's a small chance of the market hitting that target. I think it's more likely a higher chance of success if you went long to take profit at this area, 377.8 all the way to 379.5. Let's take a look at the Dow Jones. The Dow Jones continues to flag. We made a slightly higher high today and a higher low, both bullish. More importantly, the Russell 2000, gorgeous setup on the Russell 2000, retracement back to the 50-day moving average and the prior swing high. So we have a convergence of 2 support levels or 2 supporting factors here. 50-day moving average, which is rising, and the back test of the prior swing high and the hammer candle to close the day today. So the Russell is likely again due for a bounce to the 20-day moving average at 194.7. Let's take a quick look at the VIX. Again, gorgeous rejection today on the VIX. Here it is, another lower high on the VIX. Very typical of these counter trend moves. We get a top in the VIX. The market usually bottoms just a few days later. We had that bottom potentially last Friday, and we're now getting a counter trend bounce in the market. And the VIX is now closing. Look at this. This is a bear flag in the VIX. We're now closing below the 200 period moving average on the 1 hour chart. And the full measured move from this bear flag, let's take a look, is down to the gap fill level of 14. Look at that. Perfect. It's not a coincidence, guys. It's not a coincidence when you see a clear target like this bear flag, and the full measured move takes you back to a target, an obvious target of 13.9, a gap fill area that I expect the VIX to fill. When the VIX hits this low, the market will likely have already finished its counter trend move, either at the 20-day moving average or potentially slightly higher at the bottom of this gap. Again, 453 on the S&P 500 on the SPY. On the NASDAQ, we're looking at 377 to 379. And on the Russell 2000, 194.7. I need to talk about semiconductors because semiconductors have made big gains today. Huge bullish engulfing candle, filled the gap at 150. We're likely still seeing more upside here in these semiconductors in the short term that will likely get rejected again at the 20-day moving average. That's at 155, potentially even lower than that. So today we had the big move in the semis. Tomorrow we'll likely see the bigger move in the Russell and the S&P and the NASDAQ in general, less so in the semis because this is a very large candle. Usually, guys, after very large candles like this, we get a retracement back to the middle of the candle. Here's an example. Bullish engulfing, we retrace back towards the middle of the candle. That's usually what happens when we get really large candles like this. So tomorrow I'm less bullish on semis, more bullish on the S&P and the NASDAQ and the Russell 2000. Now let's take a look at smart money, high yield bonds up top, S&P 500 / dumb money down below. I talked a lot about this in the last set of videos that I published, and it's because these bullish divergences where the S&P 500 makes lower lows and the high yield bonds make higher lows nearly always resolve to the upside, with the S&P 500 following through and following the high yield bond move to the upside. Usually when that happens, again, I talked about this in my Thursday video last Thursday. Usually what happens here, guys, the S&P makes higher lows, boom, and the high yield bond likely beginning to make lower highs. So we're beginning to establish potentially a bearish divergence, and that will likely end with the S&P 500 finishing in its counter trend move and moving back to the downside. That's what usually happens. Smart money usually leads the S&P 500 by anywhere between 3 to 4 to 5 days. That's what happened. We had the smart money rallying throughout last week where the S&P was still selling off, and we're now getting that catch-up move where the S&P is now catching up to this bullish divergence in the smart money. Very important, guys, is the summation index for the New York Stock Exchange still negative. So we're still in a downtrend. So that means, guys, any rallies will be shorted, in all likelihood will be used to sell into, because the trend remains to the downside. NASDAQ, same thing here. NASDAQ summation index is still pointing down. And that means that very likely rallies from this point on will be counter trend rallies until the summation index crosses back to the upside on the NASDAQ and on the New York Stock Exchange. Before I jump to the summary, guys, again, last day for my 70% discount on the Resurrected Legend membership, annual and monthly memberships at 54% discount. If you want to go for the annual 70% discount, you have to click pay annually. If you don't do that, the payment will be canceled automatically. If you want to go with the monthly membership, just join the monthly Resurrected Legend. Both these Resurrected Legend statuses are special membership statuses in celebration of the Money Time Machine anniversary, and they're equivalent to the $120 per month Living Legend membership. So don't go for the Living Legend, go for either one of these. Today is the last day for this discount. Catch it while it's hot. Now, S&P 500, again, likely beginning a counter trend move. That's usually what happens after the first close above the 5-day moving average. We usually get 1 to 2 days of follow-up to the upside. Usually the target is the 20-day moving average. In this instance, we're looking at roughly 451 to 453 on the S&P 500. On the NASDAQ, we're looking at roughly 378 to 379 on the triple Qs. Again, clear a breakout above the resistance of the descending wedge. And then we had a flag pole, a bull flag. Then that bull flag broke at the end of the session. Again, a bullish sign that we're likely going to see more rallies. One worrying sign is volume. Look at this, guys. S&P 500 volume is very low today. Even though we had a rally, the S&P 500 volume is low. That tends to mean that this is a counter trend rally. And until proven otherwise, this counter trend rally will be used to sell into, and not really a major bottom, not yet. The volume does not tell us that this is a major bottom, just the counter trend rally. The summation index for the NASDAQ composite and the New York Stock Exchange both indicate that we're still in a downtrend, and these rallies likely just short-term counter trend rallies that will be used to short into. With that being said, I am playing this to the upside and will likely short again at the realization of our target and ride it again to the downside. So I'm playing both sides, to the upside and to the downside. If you watched till the end and you enjoyed the video, don't forget to smash that like button. If you watched till the end and you did not enjoy the video, I thank you for your time and attention. Have a good one, guys. Bye-bye.
Oh, wow.